Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone is doing great on this Wednesday morning. Happy March, brand new month. This is going to be an important month. This is the month that wraps up the first quarter. So we're going to be noting a lot of things throughout our morning shows here and throughout our sessions in the rooms. Very important month, Q1. There's definitely a psychology to that. Speaking of psychology, a couple things to point out as we go into March. Big hot zone coming up at 10 a.m. Eastern. My Sector Secrets Mastery folks, we will talk about this as a major macroeconomic event. Not to mention, gang, if you're a morning day trader, if you focus on that AM session as a day trader, remember that ISM is a massively important red hot zone as it applies to the understanding of inflation and what's going to happen to the target rate probabilities for what the Federal Reserve is likely to do. So a lot of things coming up, not just this week, but just here in about an hour. 10 a.m. Eastern, ISM manufacturing. We do have the EIA inventory number coming out. So that means crude oil is going to have a good hot zone of its own at 10:30. It's one of my favorite intraday hourly price movement range trades where we can fade volatility when that comes out. And we could probably even do that with ISM. So we'll see what kind of day trades we might be able to take advantage of, not to guess at which way the markets are going to move, but to react to, again, the volatility. So that's what we have coming up this week. Well, let's see what kind of mood the broader averages, the bonds, and the euro are in. Euro is moving higher. What does that mean, gang? That means that the dollar is moving lower. Generally speaking, that's kind of bullish to equities, but that seems to be something that we're noting before the bell. There is a disconnect, gang. You'll see that we're seeing slightly lower indices despite the fact that dollar is weak. All right, what about the tie break? What's going on with the ZB? And this could be some of the confusion because a long bond is plotting for now an inside candle. All that means is that we are trading within the range of yesterday, Tuesday's high-low range, which is just a pause candle. Don't make anything of it too much, other than bonds are actually arguably oversold in a neutral environment, and looking to the long side would be a pretty smart way to go. As I wreck my office here. Okay, so that would definitely be something that I would be interested in, a trade to the long side. All right, so taking a look again at what we've got going on, three markets and a calendar is a really easy way to sort of reconnect with the pulse of the market. All right, so as always, gang, best part of our show are your questions, and let's go ahead and dive into those. A quick reminder, we do have the masterclass coming up on March 11, and we'll talk more about volatility. We'll talk more about how I'm measuring volatility, how we're automating that process as well. Stacy, how are you? It's going to be a good trading day. I'm excited. I'm excited for the rest of Q1. I'm excited for not just our swing trades and our end-of-day trades. We have a pretty active portfolio. We do weekly portfolio positions. Pretty excited for all the different facets of what we as traders can look at with timeframes. Absolutely. All right. As always, gang, type in your questions, type in your symbols. That's what this show is all about. Type in the symbols you want to analyze live here together. And we have our first request. Thank you, Off-Road Bear, CMCSA. All right. Let's take a look at Comcast. Let's start at the bottom of the screen. And that means, here we go, neutral environment. Trend before we went into chop was up. This means bullish neutral, right? We know the market is not trending any longer, but we do have bullish directional bias. This right here, gang, is the multi. I know a lot of you already have this, especially if you already grabbed the DPMR Masterclass Toolkit, and you already have this on the bottom of your screen. So when you are pulling up a symbol and you see green, yellow, be neutral but bullish, right? And then the neutral tells us we want to look at the slow stow. So off-road bear, oversold slow stow, neutral environment, and I'm looking for a potential buy. Doesn't mean we buy quite yet. Now we need a price pattern. Now we need some sort of level, whether that be Darvis or DPMR, preferably both. Stack those reasons why bulls would step in at a certain level, right? Okay, so then let's do another thing. I know we don't do this often, and it's something I would like to do more often with you all. And this is very much at the heart of what we do in the mastery. So let's do something here real quick. All right. And I hope this is something that a lot of you can put to work today. Okay. I'm going to head on over to a site called ETFDB. Right. It's a free site. You don't have to be a subscriber. And let's do something that not a lot of traders know to do. Let's do a reverse search on Comcast. And this is why having a sector and index understanding, a top-down approach is so helpful. Where is Comcast weighted? Telecommunications, the IYZ, XLC. All right, well, XLC we know is an interesting corner of the market. So let's crack open XLC. All right. Now I can see all the different stocks that are weighted within the communications ETF, which, by the way, is the number 2 weighted sector in the NASDAQ. If you didn't check out the video that I did yesterday talking about the NASDAQ, consumer discretionary, the XLY, and Tesla, check it out. It's over at the Simpler Trading YouTube channel that I believe most of you are sitting on right now. Okay, what do I have here? XLC is in a little bit of a mess, but Meta's not, right? Look at the way in which Meta is moving. If I'm looking at anything off-road bear, Comcast is great. Here's Comcast down here, but I would definitely prioritize just just a quick glance. This is the benefit of automation. Meta, TMUS, and maybe even ATVI. Oh, you know what? And T, even though it's under 20, I would keep an eye on T too. Those are the 4 symbols that I would look at. Is Comcast one that I would prioritize for a buy in the XLC? It's actually not. So the other question is, do I want a long watch list or short watch list? Yeah. So that's one way to look at the way in which we're breaking down, starting with an individual stock, but then looking one level above saying, we definitely want to look at Meta. In fact, let's do that here real quick. So let's pull up META. And again, gang, if you have any symbols you want to look at, don't be shy. We'll break them down like this together. Here's META, north of the propulsion, green multi-trend, green 1-hour chart. In fact, I'm going to put my sector secrets, folks. We're going to talk about some Meta for sure today. We'll see if we can't build a position in Meta if it reaches the target. Okay, so these are things that we definitely want to keep an eye on in terms of opportunities that are brewing because the structure is so darn good. By the way, gang, I do have, you can see there on the left, hopefully you can see it, the Countdown Trader website. It's free. You can check out all about the daily price movement ranges. What are they? How are they helping me through this environment? And then the way that I'm trading in this environment. What are the time frames? What's my overall outlook? And you can see those are 2 recent updates. Check them out. I think they're going to help a lot. You can find those over at countdowntrader.com. All right, Mike Barda, what do we have here? Thank you for the question on gold. Yeah, let's dive into gold. This is one that I'll tell you, I have a position on gold right now. It was a little aggressive. I do like it. We still have the 10 a.m. ISM number to come, but here we are right in the daily price movement range. Okay. We also have a neutral environment. It was over there. You can see it was overbought and it followed through for a bit to the downside. Did not quite get to my target. All right. Am I still in the trade? I am still in this trade. But if I don't get some clarity with ISM and some weakness as we get into the morning, what we do, let's talk about risk management for a second, right? It's so easy to say, well, I won here and I won there and blah, blah, blah. Some of you may not know this, and I don't say this in a braggadocious way, but I've never blown up an account. Never have. And it's almost, unless aliens are hovering over Manhattan, it's almost impossible that I will, because you got to work the math around risk management. When we are wrong, when you're wrong, when I'm wrong in a trade, how do we know where, at what price, or what reading we're quote unquote wrong? Do we let our options go to zero to max loss? No way. I don't hate my money. And I know you're tuning into Charts and Coffee. You don't hate your money either. So we have risk management as the number one thing that we know is going to help us become better traders. Structure is important. Different indicators are important. Strategy is important, but risk management is everything. So if you're struggling with risk management and you're saying, Rob, I've got all these indicators, I've got strategies, but I'm not able to turn the corner. I will tell you, after working with thousands upon thousands of traders, the number one issue isn't that you have the wrong indicator. It's really two things. One, probably not managing time and volatility as best you can. And most people don't even know how those impact their trading. That's number one. Well, number two, and number one is risk management, not having a repeatable risk management approach. So I'm going to talk about gold in that regard, Mike. Gold is potentially one of those things where I'm going to say, either I'm going to be right by 10:30 today after we get the ISM, or I'll tighten the stop and let the trade play out without risking full debit on GLD puts that I have right now. Okay, so that's really important. Now, what would I do going forward? Okay, let's go to the bottom of the chart. Structure dictates strategy, and strategy is going to absolutely be a mean reversion. At this point, if we move lower, that would give us an opportunity to get out of the trade with very little loss, if not pretty much break even. And I would have to start thinking to the long side because structure has changed. So if right now you're struggling with, okay, Rog, I have all these strategies, but how do I know which to use? That multi down here is, if there's a decoder ring for strategy, it's this. Because once this went green, it changes my expectation of what the path of least resistance is. And it kicks off a cascade of decisions we will make to limit risk. And I hope that makes sense, gang, because I know risk management isn't sexy in any way. I know, but those of you that get it, you get it. You know that in order to succeed as a trader, risk management has got to be the first task. All right, so let's jump on back to one moment here. Again, if you have a symbol you want to take a look at, let me know. Let's jump on back to bonds, because bonds and gold are inextricable. If gold is going to move lower, it's going to be as the real yields, right? The difference between inflation and bond yields widens. So when I say gold, we're not quite sure what it is that we're going to get in terms of that next leg in gold, up or down, whether we retrace or continue higher. That's why that ISM is so important. And keep an eye on ZB. Ideally, these two markets move together, that the bond markets, think TLT or ZB, or GC, GLD, ideally they move together. All right, next up is 6E. Yeah, let's circle back there. Cool. Do I like the 6E? Yeah. Is there a bullish signal, or was there a bullish signal? Yeah, there actually was. Well, let's look at what time it happened. So here's the DPMRs at work. And again, gang, all of this is automated. So it's not as if I'm drawing any lines or levels. Either they're there or they're not. So this is the daily price movement range right in here, sunk into that range. Even before that, here's the 200 propulsion, neutral market, bullish before that. Look at all these slow stow signals right here. This is the sector slow stow right in there. Look at all the signals saying we need to be to the long side. Unfortunately, I say unfortunately, I need to sleep. This triggered off on the Euro futures contract at 7, 8, 9 p.m. last night. So this was very much an Asian session trigger. If you have a limit order in your futures contract, let's say you're used to trading futures and you have a limit order, that would fire off, right? That would be the way in which we would look to engage that, because this is nearly a 24-hour market, not 9:30 to 4. So there are a couple bullish signals. One fired off on the 24th. And let me put it another way. There are no bearish signals here. There are no bearish signals here. So sometimes for those of you that are still in a place where, Rog, is this going to be a buy or a sell? If that answer isn't obvious, move on. And so there's no sell signals here, only buys on those short-term swing time frames. All right, Tesla, sure. We got Tesla question from Sergio and from Zakea. All right, so let's take a look at Tesla. And I broke Tesla down in yesterday's free video. Let's see what it looks like this morning. We want to be looking long on Tesla, and we do have that investors day, whatever that's going to amount to. What I would love to see is a little bit of weakness on Tesla. However, if we don't, getting above the 200 propulsion would be incredibly bullish for Tesla. It would put it on the map in a completely different way, because once a stock or a futures contract or an ETF or whatever moves through the 200, when you think about traders who are scanning based on technical criteria, being above the 200 puts it in the bullish hemisphere. That's why I call that 200 the equator. We can also look to buy Tesla on a 1 hour, anywhere really between 205 and 200. I think that's a great zone as well. We are oversold. We are neutral. The trend that preceded was up, right? And we're absolutely up on the daily, which means a mean reversion would be great. However, if you checked out the free video from yesterday, you know that I have another trick up my sleeve. And that is, I wish I knew how to do magic. I don't. It is pretty cool. We're going to look to zones around that 200 area. If we can get a little bit of weakness, I absolutely do want to buy the DPMR. Again, I'm only allowed to buy. So we can either look for mean reversions or the Darvis on the 1 hour, which would be a shorter time horizon, or if we really want to commit to a longer term follow through and go with a different expectation for follow through from how many days, maybe weeks we could be in the trade, Tesla is definitely absolutely a candidate for that trend follow for sure. NVIDIA. Yeah, let's wrap up our show with NVIDIA. Thank you for the symbols, gang. All right, NVIDIA, also a buy. Gang, look how easy this is once you have the color coding right there. I know where the zones are. I know what the structure is. I know if I want to be a buyer or a seller. Absolutely a buyer. Here's the zone. That's what we're looking at. So if we happen to see enough weakness to get us down to about 229, 230 on that one, Sergio, I would be a buyer. Absolutely. And since it is a green trend, I don't know that we get down to say 207, right? But that would be a mean reversion. And that would be also something to think about. But one of the challenges we've seen, not just this year, but also last, is we're not always getting those more meaningful mean reversions. So we can use something a little bit more aggressive, something that's following volatility with those DPMRs. All right, gang. And just like that, our show is up. Thank you, as always, for joining us for Charts and Coffee. You can check out the Raghee report back at the Simpler Trading YouTube channel. By the way, this week I had the weekly watch list. So if you're in the options room or my Sector Secrets Mastery, I've sent out those notes in that video as well. So you can check that out. All right. I'll see you tomorrow. Same time, same station. Be good to each other, gang.